Good morning, everyone. Microphone check. Screen check. Looks like everything's working correctly here. Good, good. Gotta love that. Wonderful. Welcome, welcome, welcome. Hopefully everyone was able to rest up, get ready for a day ahead and all that fun stuff. As always, before we jump in, on the left side of the screen, make sure to read through the Live Trader Morning Prep PDF. Very important to go through and understand everything that is inside there. I just want to take a second to give a shout out to our latest members that joined in the overnight, as well as yesterday. Thank you so much for the support. I'm pumped to have you on the SSFTG family. If you aren't a member of SSFTG or you haven't joined on the YouTube side, check out the join button below the stream to gain access before our next private webinar, get access to Discord chat, and you also get that awesome badge next to your name here on YouTube to show your support. If you are trying to figure out what it is exactly that we're doing here every day, look no further than the Day Trading Academy. You can find that over on SSFTG. It comes packed with 19 plus hours of material loaded for you, not including the hundreds of hours of stuff going on over here on YouTube. And speaking of which, please keep in mind that on the YouTube broadcast side of things, it does have between a 3 and 30 second delay, depending on where you're logging in from and all of that. If you do want a non-delayed version, though, you can level up to the VIP status and you can enjoy the exclusive permanent access to our non-delayed live analysis stream over on Zoom, as well as monthly VIP webinars, private VIP events, one-on-one scheduling access, all kinds of cool stuff. So whether you're here and you're totally new or you're a veteran over on the VIP stream, welcome. I'm glad to have you here with me today. Let's take a look at some charts, take a look at some news, see what's going on for us for today. Don't forget to grab your morning DP levels. Those are posted for you this morning to give us a kind of a heads up in terms of what to expect for volatility and all that fun stuff, which there's been a decent amount of. But anyway, we'll get to that in a second. On the news calendar, looking at the news for today, we really don't have anything. It's pretty calm and quiet. Not a big deal. I mean, yesterday we did have some stuff going on, but today the only thing we really have is medium announcements, factory orders on for March that comes out at 10 o'clock. It is Tuesday rather, so we do have the API weekly crude oil stocks. It gives us a heads up for those Wednesday inventory numbers for crude, but that's about it. So pretty calm and quiet on that front, and no real news to worry about. Over on the NASDAQ, starting off there, as far as the overall movement goes, when we zoom out, we can see this thing is just a giant range. We're not really going anywhere. That said, in the nearer term, we have just attempted to break above the highs. They did, technically, right? It's better than nothing, I guess, but that was it. And it just totally failed all the way back down again. So much so that normally you'd expect to see some of those highs near each other, like what we had over here, before you see it roll back over. But realistically, it was here and then it was down here. There really wasn't a whole lot in between. And that does seem to follow through with what we've been getting more recently, but just kind of loose. Again, if you look across the top, you've got three presses, big drive down, 3 presses, big drive down, kind of following through this time around. Usually, historically at least, we've got 2 legs on these moves, and then sometimes it can rattle around and come back and kind of fight over it. Right now, we've got that first leg down, second leg down. They might even be fighting over a smaller third leg down, but we're kind of right around that area as is. So this is definitely a major zone of support for buyers to try to be kicking the market back up. It's just the way that they failed off of the highs, that's a bit imposing. You know, it's going to take a lot of strength to fight against that. And given the bear trend is so aggressively down right now, well, I think we're just going to have to either stick on the bear side or wait. Over on the S&P, similar situation. The S&P is obviously stronger, has been for a while in terms of the overall context of things. But as it stands, we are still seeing a little bit of a dip lower. We've got those closer clustered highs, a little bit nicer across there. And if we look at this from a range perspective, this is the first time that they've really been able to pierce the lows. And it's so far, at least, it was immediately rejected. They kind of stuck their head underneath there and then immediately popped right back up again. They have not been able to get back above that like 65 area, so it does seem to be a bit of a struggle bus zone, and we might see some of these lower high, higher low kind of stuff before we get away from here. But that's going to be the point of interest. Buyers are obviously accumulating down here in the 65s. It's just a matter of whether or not they're going to be strong enough to get it to go back up and continue, or if it's going to fall lower and reverse down. Then we might be looking for those deeper moves. 41.20. We'll see. Probably not today. Over on gold, Gold does have some continued sideways action. What a surprise, right? We did get that trap underneath the lows like we were talking about yesterday. We've got this sideways range, quick little poke out, and then a continuation rally back to the upside. The highs are the major objective, which technically they were able to achieve. It's another one of those, well, technically they got the job done. That's not good enough for context for the buyers, right? That buyers need to see this thing really rail above the high. And it spent what, like a millisecond up there? It couldn't do much before pulling back on itself. That could just mean that buyers are looking to buy in a deeper pullback, but realistically, that's not going to get a whole lot of buyers pumped up thinking that this thing's going to go to the moon. The high barely broke. So if buyers are going to be coming in, likely they're going to be looking for a higher low dip back into the 67s to 70s. That's going to be the much better zone of interest, at least in terms of the risk profile. Then they'd be able to risk down below these lows with entries near the range lows, but the objectives would be 2-to-1 back to the highs. Fits nicely inside there. On crude, technically speaking, we do have that L5 higher low and that reverse back up, and buyers on an L5 are typically looking for an L2. It was an L1, an L1, an L1, and finally we get the dip back to L2, but like we were talking about yesterday, nobody wanted to show up to the party. They're like, nah, no, I missed the boat. It's gone. So now that it finally did pull back to L2, nobody showed up. They bought the L3. Massive support on L3 with continuation. Consolidated in the 1 before the breakout through the highs, but we do have a new high. So with this continuation up, and they have broken above the highs with a little bit more decisiveness, buyers are going to be looking to continue this trend. Trend continuation is usually L1, L2. The concern, however, is that we came off of an L3, and a lot of times that L3 is a bit of a precursory kind of heads up like, hey, might want to be careful when we get back up to these highs. If it fails too aggressively below these lows, which if you look at the wicks, kind of looks like what it's trying to do now, that could be a concern for that deeper pullback. So instead of an L1, maybe better to gun for that L2. We'll see what it wants to do. On the euro, finally pulling back, taking its sweet time, that's for sure. Jeez, oh Pete. Looking at the overall movement, we're back in this consolidated range. We've got the most obvious divergence I've ever seen in my life on the MACD, showing continuation at the upside. The big breaking point, the proof of this divergence is breaking above this high. So it's still super early. They got a long way to go. But if they can break above these highs, then realistically you're looking for the breakout pullback, continuation, back up to the highs, etc. That's the major objective. So, hey guys, how's it going? Welcome. Got the higher lows, major divergence. As it stands, realistically, I think a lot of sellers, originally they were buyers, likely buying into that pullback they got dumped on. A lot of buyers are going to be looking to get out of break even, obviously given hindsight, but that move up, if they were buying here and they were buying here, midpoints right there, that seems to be like a pretty perfect spot for a break even exit, doesn't it? And given the response there, again in hindsight, but we are seeing a very strong rejection there, all the way down to a new low. Now again, massive divergence off the lows, but it's fairly obvious what happened here. A lot of the buyers who were trying to get that move going way up here, they kind of gave up and they chose to exit at least the majority of their position, or at least the original position, halfway back and try to hold on to this last portion. Maybe they try to ride that out. That got flushed too. So every time the buyers have tried to get anything going, they just get slapped in the face. Here's the thing, right? This is very typical of what we've seen from the euro recently before major reversals. If we look at these major swing lows, that plot, it goes underneath it and then bam, goes flying all the way back up. Plots a major low, bam, goes flying all the way back up. Plots a major low, you got to get the idea. It's over and over and over. And when it doesn't, it's obvious about it, right? It just slams through it and it doesn't come back. Well, what did we just have? We had this most recent major swing and it just failed through the bottom. So if we start demonstrating bullishness here, I have every reason to believe that we've got a good shot of at least getting back up to settlement, and a lot of these moves have gone up to new highs, which means that the objective would be up at 21,600. So from a risk perspective, at least, this is obviously, maybe a little bit better on the Forex side or option side if you have options on that, like NADEX as an example. But this would be one of those ways to approach it with a very small amount of risk. The only reason I say options is because it's early to the party. We need a lot more sideways. But out of the monies, like way up here with a risk tolerance of like down at the lows, that's nuts. I mean, the potential reward on this is insane. Even if it goes halfway, it's still like 3-1. It's incredible. So from a swing perspective, this is a great spot for Euro buyers. It's just super early. A lot of buyers may even be waiting for something along the lines of a 3-press low. That'd be even better, because then we would have 3 new lows and very likely a continued divergence. Now we've got an undertow. That's when you start stacking the odds even more. So Euro's looking good. Would be nice to get a bit more context, though. Over on Bitcoin, we finally do have a little bit of a pullback after yesterday. We've got a nice flush to the downside. And typically when we've got these flushes, you've got to see how they form, right? Looking at a value perspective, if we go from the last high, that was about a 4.25% pullback. Typically, if they're going to do a value pullback, you're going to go about double that. That would be 8.5%. So that could be very suggestive of the fact that we aren't necessarily at a low yet on Bitcoin. They could be looking for a quick little blow off down to 54,000, and that would finish the objective. And you can really see how nicely that lines up with a possible wedge low. I mean, it's right around that area. And if they overdrive that zone, that's even better. So, man, there's a lot of stuff here that could get pretty interesting if Bitcoin wants to get that little blow off. And of course, they could even operate on the narrower, which would make it a bit difficult for us to get the fill, but that would actually allow the overdrive to be into the entry, which is kind of nice too. I mean, either way, it's a really nice area and potential for maybe an avalanche wedge if they can get down there. Ethereum doesn't stop going up. This is the most ridiculous chart I've ever seen in my life. This is insane. I mean, it's great if you're long Ethereum, which I think everybody on the planet should be. But this is nuts. This is the most consistent, stable, short-term rise I think I've ever seen. Like, this looks like the NASDAQ after 2008, from like 2008 to 10, where it's just straight up, but it's not doing it in crazy moves or anything. It's just kind of grinding its way higher. And finally, we've kind of broken above those major highs into price discovery above 3,000. And guess what? Above 3,000, it was not shy in the least about breaking above those 3,000s. Very typically when we break above those major psychological levels, because remember the last balance point was around 1,500. Now we're back at in that 3,000 area all time. I mean, this is a big zone. They're doubling up. A lot of buyers who bought in the dip, sub-thousands, like in the 700s, 800s, when it consolidated there for like 2 weeks. This is major profit objectives that we're hitting. We've just gone through them, right? So every buyer on the planet is not concerned in the least. This is not a little weak breakout or anything. This thing just slammed through the highs. If it does pull back, guess where it's probably going to pull back to? Right around that 3,000 area. Does that sound familiar? Flashback 3 years ago to Bitcoin. Seems like we've got some rinse and repeat going on, doesn't it? This is weird. If you look back at the early day Bitcoin charts and you kind of stack it on top of what Ethereum is looking like right now, we're getting some very eerily similar movements. You remember last time they got stuck at around 3,000 after they broke above 1,500? They pulled back to around 1,500 or so. Then they rallied above 3,000, went all the way up to like 6, 7. I mean, that big overdrive move. Where'd they pull back to? Remember what we said when they pulled back to that point? That's probably the last time on Bitcoin we're going to see 3,000. Sure enough, it's gone, right? I mean, it's at 60,000 now, you know? This looks really similar. If Ethereum in the flippening and everything that we've been talking about for the past 3 years is going to happen, this is setting up perfectly. I mean, it's like deja vu. It's crazy weird. I don't want to be a buyer way up here. I want that healthy, and I know it's not going to feel healthy at the time, but I want that big drive back to the downside and just get obliterated, scare everybody so that the accumulators can buy it. Remember what we've been talking about forever now. Even if big brokerages, exchanges, even if they don't want to have Ethereum, even if they don't want to hold it, if they are going to do any transactions, they have to. And that's the key to what this growth is. We've been talking about that since forever ago, right? You're just seeing it really stack up now. This is that exponential side. Crazy move. Yeah, it's if it is going to be comparative, then we should see that rally up to let's look back on it. We've got a little bit of time until the open, because that's incredibly interesting. Ooh, come here, chart. There we go. BTC. Now I'm curious, who has the most data? I know it's not Binance. Who's got the most data? Would it be Bittrex? Bitfinex, maybe? Ooh, man. Bitstamp? Yeah, it's got to be way out there to have that kind of data. I'll start with Bitfinex. It seems like that was a good bet. Yeah. So if we go over to what it did over here, way early in its days, right? We're talking Bitcoin back in the $100 range, right? It broke all the way back up to around 1100. And then, there was that crazy vicious snapback that was down to 100. You remember that? That was wild. And then we had this back and forth sideways craziness, choppy, sloppy, grind, right? So we're looking for repetitions. We've got this overall movement that's going on over here. And after they broke above, they rallied up to around 1100, snapped all the way back to 160s, 170s. From that point, ramped all the way back up to 20,000. So obviously, we're going to have to zoom in a little bit closer because this went very quickly. Let me turn off logarithmic and see if it helps. I think it's got to be logarithmic for it to look all right, though. So from the original break, where did it ramp? There it was. So here, just like on Ethereum, they bundled up at around, in this case, Bitcoin was 600s to 700s, but Ethereum was deadlocked in the 700s, broke above, ramped up into the 1100s, pulled back, 700s, popped back up, 1300s, pulled back, 880s, and then ramped all the way higher. They put in the top at around 3,000, backed off, 1800s, right? So if we're comparing this right now to Ethereum, let's do it this way. This will probably mess up my other one. Yes, I know, but no, I'm not going to give you money, thanks. Let me go back to Ethereum. I'm cheap, I can't help it. If we're looking at the overall moves here, we've got that 700 balance zone, which was... Actually, it really didn't spend a whole lot of time there. God, it felt like it spent a lot of time there, but okay, well, it is a lot more reminiscent of Bitcoin than it hovered around the 500-600s. Rallied back up into the 1300s. They didn't really pull back, though. They broke up to the 2000s and then pulled back to the 1300s, whereas Bitcoin kind of jostled around a little bit. Then we had that rally back up, higher low, lower high, continuation back up, and we're in the 3500s. So if we compare this back to early days Bitcoin, when they were breaking back up, like you were talking about, 4500s, 5000s, that's going to be the area where we're expecting to see some resistance. And when they dip back, again, these are totally different markets, but we can still utilize them as an idea because they're looking really similar. If we line that up from the initial pullback, that was about a 40% pullback off the top. So if we compare that to Ethereum, and we look at the overall movement that's going on here on the daily, right? Look back. Let me zoom in a little bit closer. Got 10 minutes until the open, so we're at, where are we right now? 3,500. So here's Bitcoin back in 2017 when it was ramping up from 1,800 when it broke above 3,000, and it did so incredibly decisively. This is the movement that they had when they broke above 3,000. Straight shot, straight up to... it didn't really stop until it hit 4,400, and then it dipped back to 3,800, ripped back up to a new high, 4,500, dipped back, 3,500, ramped up to the highs before it finally pulled back a little more. So, you can see this parabolic growth does kind of make sense if they're going to be following along with it and seeing an inside pullback, a bear bar, something along those lines. Buyers looking for a continuation up towards that 45 to 5,000 mark. It's crazy. And then from there, we'll see what happens. All right. Over on the NASDAQ, looking at the daily first and seeing that we are pulling back below the L1 and popping below that zone. Now, the next base point for the L1 is going to be at around 13,595. So let's move this down to 13,595. That's going to be the low side of that L1. See if they can come back to that area. That's also the full reversal. I mean, it's a full flip from the bottom. The sellers tried getting this to drive lower. You can even see where they tried accumulating for the second leg. They got dumpstered. They're going to be looking to get out. And usually those pullbacks, if they fail at the highs, are going to be a little bit deeper than traders are going to expect. So although we'll probably find some short-term support at 595, if it starts cracking through there, look at these last 3 or 4 days now. Pretty strong. That could be the start of a wider pullback down to the L3s-ish in that zone. These all-time highs, I think it's safe to put it on the new highs now. So 14,064 is the new top. 13,595 will be an area of interest. But that said, I do also want to park another one at 13,453. Love you. 13,453. Sorry, my wife's heading out. Anyway, so we've got the deeper pullback, 13,595. Then the next zone, 13,453. I don't know if they're going to be able to pull back below that, but, you know, you can see these candles are growing, and this one is larger than the rest, and there's still 7.5 hours. I love you, too. Oh, thanks, Captain G. I appreciate it. Looking at the 60-minute chart, zooming in a little bit more. I mean, the big point of interest that we saw on this dip back were the buyers, right? We saw the buyers accumulate down in the lows. They got the new high, and it just whacked all the way back down to new low. You can see them stepping up, but like we were talking about, it went too fast. And it was too hard. And because of that, they got out. They jumped ship. And look at the balance point that created. And you can see when they finally gave up right there. So with that big breakdown to the downside, we've got a heavy drive lower. And this could be coming into two different ways, right? The nearer term, which is kind of completing. And then the larger term, which would be this down into this, which you'll notice is also very close to completing. We are in some major sell objective zones. And that's going to cause some problems, right? I'm not necessarily expecting this to keep falling, but we've got to stick with what's obvious, and the near-term trend is down. They just failed off the highs really aggressively. We saw the volume shift. There's a very obvious balance point that they put in here that just got slammed. If it does come back, it's more likely those buyers are just going to be getting out anyway. So looking from this new high, drawing a little bit further forward now that we have continued lows, very likely going to have a balance somewhere in the 870s. 13,900s, a little further up than I thought. So you can see we've got the accumulation volume down into about 13,905s, and then they gave up and it's profit taking underneath. They're running out of contracts. They're not going to have too many more to take profit on, but it's plain as day. I mean, the volume's telling you what's going on right here. We haven't seen any accumulation going on. So if buyers are going to reverse this in the mentality of a range, we don't have the volume to support that yet. If we look back historically, every time they have reversed off of the bottom, just to give us an idea of what they did. First off, visually, you can see that they had at least 3 tests here, 2 tests here. Pretty obvious that they had some pretty obvious bounces at the lows. It didn't just immediately reverse. They plotted a lot of volume typically above it. So you can kind of see where it's missing, right? Right here is where it's missing. If they're going to build the volume here, that's kind of where they've got to do it. And that would give the volume sort of kind of in the middle, and then it would allow them to get that reversal out of there. It's almost like it's there giving you a heads up as to where it's going to build in. Look at the negative space, right? Now, obviously, this gargantuan rally to the upside, looking at it from a structural standpoint, we've still got 4 minutes left until the open. We've got the deeper pullback. It's an L3. Generally, you prefer to be that a little bit deeper, but the bottom was an L5 at least. It helps. We've got the L5 into the L3, a little bit of confusion. They tried to reach out to the L5. There's no more confusion after they started breaking above the highs. The next pullback, this is what we see in the daily. We've got the L1 pullback. They bounced off of it, rallied up to a new high. Now we're coming back through it. So we'll see if they can get down to the lows. Interesting area either way. And then over on the 15, the 15 had that volume point, same thing that we saw in the 60-minute. If we project that a little bit further forward, we're probably not going to get any new information. So if we're looking at this on the nearer term, let's see what these sellers are doing on these small little pops, because they're definitely not big, but if we're looking from the bottom to top, they're typically weighting their averages about in the middle, building above, and then failing back down to a new low. If we look at this one, they built their average right in the middle. The bulls tried to get it to rotate, and then they just got dumped on too. So every time buyers are trying to get something going, they're just getting slapped. Yeesh. Thoughts on Litecoin? It's pumping. Yeah, I actually talked about all of the cryptos last night in the Discord room, or was it last night or this morning? I don't remember anymore. Oh, it was this morning. It was before I had head out at 6 this morning. I think Litecoin was on that list, right? Let me look. Litecoin seems to be following along as usual. The rest, it has some catch up to do, and buyers are. They're definitely buying it that way. Like, it's got catch up to do. That thing is screaming to the upside. It's always been the top as far as the ralliers go, right? It's Bitcoin, Ethereum, Litecoin. Those three have always been right hand in hand. Typically, Litecoin always takes its time and kind of catches up a little bit later. Ethereum pushing into all-time highs. Better late than never. If it's going to follow along with the trend and Ethereum is following along with Bitcoin, then realistically, the Litecoin rally, it's no stranger to these prices. It's not like it's fresh highs or anything. But didn't it? It got up into like the thousands or something before. Mentality is that ETH profits go to Litecoin. True, yeah. Right now I think everybody's profits are going to Doge. But yeah, that would be the idea. The concern though is with the Ethereum deep 1155 whatever the thing is coming around the corner. They're going to be burning an incredible. Ooh man, I don't know. I don't think this spaceship's done yet. I think we got another 1,000 to go at least on Ethereum, which is just going to suck all the other markets higher, which is great because a lot of those other coins are built on Ethereum as their kind of backbone. Not all of them, but it definitely helps. Asian session and Euro session trending down. We already know the bears are in control. Right now we can see there's a bit of balance. Open in 30 seconds right around the corner. Got sellers demonstrating resistance off of the L4, breaking down now with an L2. They're trying to get the continuation, and that's what this wedge building is. But ETH hasn't stopped pumping. Oh, for sure. And that's like what we've been talking about. It's one of those things that it's a necessary evil. They have to own it if they're going to be transacting on it. Sellers trying to get that continuation move down. A little bit of was that a double top? No, it was a lower high. As far as the movement to the downside goes on this most recent pullback, before the breakout at least, we built the POC relatively low weighted. Not a big surprise. Is it just me, or does this look like identical to what happened the last time? POC is kind of hovering in the middle a little bit more. As far as the swing perspective goes, for any of those types of setups, it's a tough area. I mean, Euro has got to get back down to these range lows. And until we get down there, that's going to be the zone of interest. But I've got to wait for it to get down there to see how it does it. So the AOI at the moment, 1.2, big psychological level, pretty obvious. Crude oil, I would still like that deeper dip down the L3s. Right, POC middle weighted, 13,680. If we look at the initial rally up, the majority of the volume was transacted at around the 680s. And it looks like they tried to get it to hold lower and failed so far. I don't want to be too quick to go long, but that might just be a trap to try to get buyers to get buying so they can slam it right in their face. Immediately closes underneath the 80 quarter. POC still hovering in the 80s. Sellers will be looking for a quick snapback to that 680 now that they've gained proof. Nice big push. Those stops are just under the low. There they go. Not quite a rinse and repeat, but somewhat kind of similar, I guess, in the sense that they got a wedge and a breakout. It's just this time around at the open, they trapped the high first. Zone of resistance at the moment for a continuation on the downside. It's going to be in this 680 area. Not really a whole lot else going on so far. Across the board here, while waiting for the NASDAQ, the S&P is just kind of hovering. We got 1 minute until the first 5. Euro's got a bit further to go. Can't get over that ETH was $90 last March. Yeah, isn't that gross? In a good way. It's a good gross. Sellers attempting to get more continuation down. It's very aggressive down here. I would much rather wait for a deeper pullback up into the 680s. From the S&P's perspective, we still have 10 seconds left until the first 5 is done, but let's see where that's at. Down at the lows, 63.50. And on the NASDAQ, the first 5 volume plotted super low, actually. 42. Looking at the S&P, I have a really hard time not liking the top of that. 70 quarter, at least for a scalp. Great failure zone. Maybe one above just to play it safe, though. Safer. Almost down to those 595s. They're getting close. Those 595s are not a global drawing object, though. There we go. Still very, very sideways. Starting to build up on the undertow at the lows. On all fronts. At the moment, it's just divergence. Sellers continuing to try to drive this lower. The initial 5-minute volume node is not helping them at all. See if they can get a little bit of a rotation back up to the 13,680s. That'll be the zone of resistance there in the short term. S&P will likely try to find some support off 6350. That was the big volume node, but the trend to the downside would lead me to believe that I don't want to be the first one trying to buy against them. It's more likely to make a new low anyway. So if buyers are going to try buying 6350, I'll let them. That's fine. But I'm not going to assume that they're going to be the ones that are right. I'm going to go 3 points underneath them with the assumption that they're going to have to build in the whole way down. And that's where I'll look to try to get the scalp going. Two MACDs of different settings, right? Yep. One's designed to be faster, one's designed to be slower. The MACD, in this case, the faster one, is being used in favor of a stochastic. You could also use a stochastic or RSI or a stochastic RSI. Something, just the faster side of things, basically. I just prefer the MACD. For now, at least. Obviously, that changes. I used to love the stochastic. Market's still showing a bit of difficulty hovering around this 642 area. S&P hasn't really gone anywhere. Still stuck. The euro isn't even close yet. That is the zone of interest, though. As far as eyeballing it goes, the 1.2 area makes a lot of sense. I'm going to build just a bit above it, though, to play it safe. And then at 1.2. Crude. I have a hard time being interested in crude until at least L2. I would prefer to have it get there pretty quick, too. Nice sell side momentum. Sellers will be looking for this momentum down. I still want it from a value perspective, which we have not been offered up. $61 will be the objective. And target filled on the S&P. Thanks, S&P. He made that one pretty obvious. Oh. I'll take that. Fair enough. That's why you got to understand what the trend is. There'll be people that want to fight it. That's fine. They can. Sometimes that's me. I've been there. We've all been there. We've had those days. I just don't feel like doing that today. It seems like it's the harder path. 13,595. Now, if we can start digging down into there and demonstrating support, then sure. Maybe from an options perspective, because obviously it is still very early, they'll be able to find some bottoming formations going on down here. The undertow is beginning to show itself, although quite early. Oops. There we go. Yeah, I don't know what that volatility was, but it was kind of expected, you know. As far as the S&P and the way that it was going, it just doesn't make sense to want to buy the volume node from the bull side. From the sell side, they come back to 63.50. Yeah, I'll be interested because that's who owns the trend right now. Sellers are just slamming this market down again. This thing just keeps on churning. Do you think Doge is going to hit $1? Well, I just saw a tweet from Elon, I believe this morning, talking about Doge going up to... What did he say? Four... Hang on. Where did that tweet go? It's talking about like $4.2069 or something like that. Which, I mean, we've been talking about for a while as well. But now with someone like Elon... throwing the spotlight on it, now everybody's interested. So realistically, it's just the lotto ticket that keeps on winning at the moment. So do I think it's going to hit $1? With the hype train, anything's possible. As far as how this thing's moving right now, it's already at almost 60 cents. So could this reach out to $1? Yeah, it could potentially today. It could potentially reach out to 4.2069 today. Never say never when it comes to markets. These things can go nuts. And you get the hype train going with big money behind it. Well, look at Ethereum. No pullback at all on the indexes. As far as the S&P goes, obviously ginormous bear bar to the downside. I don't necessarily want to be the first one to the party. I'll look to fade back a little bit. We've got a lot of volatility, so I'm not going to go too tight on this. 54, just as a slight offset. So we are down in the 13,595s. This is the major zone of interest for buyers on the swing perspective. But it's, again, super early. We haven't seen any support show up yet. It's brand new. I'm big green on the NASDAQ sell. Why don't you sell? I'm not about to FOMO my way into a trade. That's usually how I find the bottom. I wanted an opportunity that was up here in the 81s. Didn't come back for me. I wanted the next opportunity, which is back in the 42s. It didn't come back for me. So be it. I'm glad you're in the short though. Great job. Just as a side note. Sellers really need to see price get through this 595 area. S&P waiting at around the 54s for an attempt back again. At the moment, the S&P has downside objectives that are based on the inside bar, which makes it a little bit awkward. Technically speaking, the bull bar would be the gap, and downside targets for them. Ooh, man, 41.37 quarter. What do you think of this sell on May and go away? I mean, there's a reason those sayings exist, right? There's something to it. Generally speaking, for me personally at least, when January is closing bullish, that's the one that I kind of hinge everything on. If January closes bullish, then I want to be a buyer for the rest of the year on dips. Because very typically, if January is closing bullish, the rest of the year, by the end of the year, closes in the positive. And this January, although kind of weird and gross and in a funky way, it did close bullish. So the S&P missed me by a tick. I don't know that I would want to base a trade off of a saying, but if you're seeing a reason for it, then sure. Previous repetition, something like that, along with some type of structure. S&P didn't want to give it up at 54. Now sellers are starting to gain a little bit of ground through this 595. Anything setting up on the swings? Not quite. Crude. I'm going to have to watch it at the bottom of L1, but I would still prefer it in the L2s. S&P has 3 incredibly strong bear bars to the downside. 48 quarter. 50 quarter. Is where sellers will be looking for a continuation back down. Although I would even potentially prefer slightly above that last bar. There we go. Still has the top-weighted POC on the S&P, so no concerns as of yet. Will the factory orders at 10 o'clock have an impact on the NASDAQ? Probably. It's medium, but given that there's nothing else, I mean, sure. It's better than nothing. Starting to attempt to push through the bottom of this L1. We're getting really close. That 453 would be insane. Look how well that's lining up right now. L2, wedge lows, or channel lows, whatever. Structural, it's just everything. If they can get their way down into the 13,453s, that's where basically every swing on the planet's going to be looking to fill in. And it's a VVP, like the perfect test. Oy. Yes, please. We know the NASDAQ. If it's going to slide that far, they'll probably overdrive it. Not that they're not already in overdrive. Undertow continues. Even with all these lows. That's a bit of a concern. S&P downside objectives. Nah, I still think it makes more sense to utilize that candle. Downside objectives for the S&P at the moment. 37.25. So as long as we haven't hit any of those objectives, then sellers will continue to sell. $50 is the backup area of interest. 7 minutes until medium news for the day. So far, the only one that I've had was on the S&P. The NASDAQ dodged me twice, and the S&P dodged me once as well. So, out of 4 swings, I've gotten one of them. Swings in the sense of like a batter taking a swing. Look at the consolidation on the 15-minute. Just vicious. Still waiting for the S&P news around the corner. NASDAQ isn't even pulling back anymore. It's just going sideways. We need at least a trap or something above the highs to spark a better downside move. You can definitely tell these last moves lower have been super, really gross. Nobody wants to sell low, but it just keeps going lower. It's not giving them a chance. Previous bear bars high 48.75, 49. All right, the short term is starting to break away from this undertow. Long term still hasn't had that. $49's the zone of resistance at the moment for the S&P. NASDAQ still really hasn't even pulled back. It's all just micro, I mean, in the pure definition, micro pullback. Three and a half minutes or so until the 10 o'clock top of the hour. Big snap up to those 595s will likely find all of that resistance. So at the moment now, that's the zone. If the market actually wants to retrace at all at some point. Oh, whoa, whoa, whoa. I'm going to cancel the S&P. Nope. POC just bottom shifted. I do not want the short anymore. That is a no thank you. At least not there. Now that they've bottom weighted the POC, realistically, if the buyers are going to take it back up to the upside, that would demonstrate a huge amount of strength. And if it breaks underneath that, that would show that buyers are stuck, and that would kind of go along with what we're seeing on the MACD from the NASDAQ. It's starting to show that there's still more downside that is yet to be had. We're breaking away from the L1 on the daily, which means that they're probably gunning for the L2. That doesn't happen for a while. So as long as we stay underneath these 95s, at least underneath the 642s, that first 5 volume node, then we should be okay. Even on a bigger pullback. Notably, every time on this way up that we've had a two-legged correction back, it was almost immediately sold. We've got this. Oops, that's not the one I wanted. Let's try that again. We've got the first two-legged correction back. We've got another two-legged correction back. So a lot of buyers are going to be waiting for that two-legged correction back, and that puts it right back at around that 595. News around the corner might allow that pullback to happen. Get everyone thinking that the news is reversing it to the upside. Think that it's reversing to the upside. That's some weird gapping inside there. None of the downside objectives have been fulfilled yet. With all this divergence on the lows, would you consider a long? Oh God, no. No. There's nothing wrong with a long, but not in the future sense. I would look at the long. I'm not interested until L2, like we've been talking about, but these are the types of days that will absolutely destroy divergence traders. Divergence traders do incredibly well if they're going along with the trend. So as an example, if you were looking for a micro divergence on a pullback, right? The trend is going down and you've got a divergence telling you that it should go lower. That's the way that it should be used in that sense. But trying to buy a low while the market's in a perpetual downtrend, no, that's just going to cause a lot of pain. It's not worth it. The only way that I will try to catch a falling knife is if we're in a massive zone of support and I'm willing to take the risk. And that's the important part, willing to take the risk, because sometimes, as we've seen before, those seats can get super expensive. So if you're waiting to be a buyer and you want to do it in a safer way, let the low get put in. Let them do all the work for you. Buy the higher low. Buy it after the trend has already changed a little bit. If it's going to be a good reversal in the solid level, it's not like it's going to stop going. Right? 10 o'clock news doesn't appear to have done anything, really. Market's still a little bit slow, sideways, kind of meh, choppy, sloppy. Just grinding the base. Okay, now the S&P is achieving some massive objectives down here. We just broke underneath this volume node, but it's a bottom-weighted POC hitting some huge objectives. I can't, in right mind, take too aggressive of a short anymore in the S&P. It's just not going to work. We've got to look for something that's a little bit better, like a bull bar selling above a bull bar. Something along those lines now. These major objectives getting hit are going to make taking shorts way more difficult. It doesn't look like it right now. Now, if they can chop through it and go screaming through these areas, then we're in the clear again. Kind of like this 595. I didn't really want to short anymore while we're hovering. Okay, now we're clear for takeoff again. You can keep going. S&P is getting some big bounces off this area. Let's see what the volume's looking like. NASDAQ finally pulling back a little bit here. Hey. Two-legged correction, maybe? Maybe finally? Looking as far as repetitions go, the two-legged corrections... let me go back over here to here. POC was in the middle. POC was in the middle. Once they broke back underneath it, that was game time. So if we do get a two-legged correction, I want to see a POC in the middle, and I want to see them break underneath it. Right now, the POC is in the middle. That's a good start. I would still love a bigger pullback, obviously. Obviously. From the top to the downside, if we've got this overall move, they did have a viable rotation off of L4, continuation down holding off of L2, more continuation down into L1. So they're climbing the ladder. Well, I guess sliding down the ladder, whatever. L3, L2, L1, and now it's just gone nuts. So the next time it does pull back, realistically would make sense to see at least an L1. That would be hovering at around the 56, 75s. If this ends up being a two-legged correction, that doesn't really put us there. It's got to go a little bit further. So I would like to see it get up into that L1, at least above 43. For the two-legged correction phasing, at least. $45 would be even better. As far as the S&P goes, if they are going to churn backward a little bit further, now given that we've hit major objectives, I'm not going to sell the most recent candle. I'm not even going to sell the second one. I'm going to go back a little further. 49, 51, 53, somewhere in there. I would much rather be a seller inside there. That allows objectives back to the POC as if it were support. It just makes it a lot easier. Not easier, just the path of least resistance. We're getting kind of that POC in the middle, but we're not getting that two-legged correction back, and sellers are trying to get this to blow off the lows again. Go a little closer now, 48, 50, and 52. See if they can get that little pop. Whoops, wrong way. Looking in the super, super close up here. $24 still rejecting. Buyers just giving up. Like, man! Now that they've given up, if this immediately reverses off the low, that'll probably be the short-term bottom. They just trapped everyone out. Yep. Now, this is a test of $24. If sellers are going to hold it down, this is the spot that they're going to do it at. But like I said, this is more likely going to be the short-term trap low to create that bigger move. Yeah, here it is. See if they can get that larger rotation. Now, how, and again, the reason why we know that something like this is going to happen is because how many times has it happened to you? You've got your stop just underneath the low. You tried getting the swing long going. Yeah, it's working great. Boop. Aw, crap. Uh-huh. We've all been there. Now, remember, I don't want to be a buyer, but I want to see what the buyers try to do, and I want to see the buyers fail. And after the buyers fail, once I know they're out of my way, then I can jump back in on the short side again. I want the buyers to try to come in. Nice reversal point back down. POC is in the middle now, and we have made a new high, so we can encroach that just a little bit further from that low. 13,536. That's the fight right now. It's a top-weighted POC, which kind of sucks. Right above the highs. It would be nice to see it pop a little bit further up for two legs. That would put it right in the L1. Uh-oh. POC shifted real fast. 536. They're trying to stay above it. Now they're topping below it. See them fighting over it? Now they closed underneath it. That's really important. Watch what happens when it comes back. How do they respond to this 36? They didn't even test it. Does it come back? This might be a quick little V-top here. Right back to 36. You see the volume that just stacked up there? And it closed underneath it. All right. Can they get the second leg? We know where the fight is. It's at 36. Just want to see if the buyers can carry the fight a little bit further up. All right. Two legs up, middle-weighted POC. Everything's looking all right to the downside. We just got to start churning back below this 36 area. Also testing 45 on the S&P, although I'd still rather see 48. It's only got 40 seconds left. Running out of time. Closing back underneath that low. Initial shorts will begin building in, but I would prefer back up a little closer to 36. Like that. Now this is a bit early, right? This is a bit early. We're not quite at that L1, so I want to see this churn lower pretty quickly underneath this 36. This thing's really not moving a whole lot. I'm going to lighten up just a little bit. There we go. All right. Beautiful bear bar back down. Downside objectives, I want to see them really flush the base here. Back down to a VVP of like 19s, 20s. There we go. As soon as I get out, you rotten pecker. All right. All right. Nice flush. I jumped out of a couple of them a bit early. It wasn't acting the way that I wanted it to, but that quick retest was fairly obvious. Ooh, now they did not break a new low. Are we going to get a second leg back up to the highs again? That would be perfect for the L1. Oh, no, retest of volume. Sellers are trying to take it back down again. Holy crap. That's a bear bar right there. Can they back up at all? Back above the 30s maybe? it's really... the 30s are a tough spot. I'd almost prefer to see like the 35s maybe. That's a nice bear bar to try to get that job done for the pulse lower. Beautiful continuation back down. Gorgeous range low. Quick scalp back down to the support. Beauty. Sheesh. We got a snappy bugger on our hands. Another attempt down to the downside. We'll try to get shorts in again. And another quick scalp right back down again. Jeez. Lordy. All right. See if they can finally break this low. So far, they haven't been able to. Scalpers are just playing this area like it's going out of style right now. We still need that healthier second leg, which is why I'm not staying in these very long. Short-term trap low to trap this, the sellers. That could definitely be the case. But given the way, I mean, look at the way that volume moved, right? We knew that the POC was top-weighted, and it was top-weighted over here. It did it super early. So when it rolls up like that, you can see that sellers are building into the move. But it broke above it. Remember what we have to do. We've got to wait for them to get back in favor. And once they get back in favor, that's where I start selling. When it comes back into that area, sell a little bit more. It just didn't get the job done in the way that I wanted it to, so I reduced a little. But the overall mentality is still the same. Now that we were underneath that, look what happened now. They came back and they defended their entry points. They added more. Instead of getting out or saying, nope, I don't want it anymore, they hit it. They're like, nah, bam. They took it right back down again. Oh, yeah, all the way down to a new low. Jeez. Oh, I'm sorry. I got you. I understand now. So when I'm talking about traps, in this case, you got to keep in mind, the trend is very important. The trend is very obviously down. We are hitting some major zones of support, yes, whatever, but the trend is still down. So when I'm looking at traps, generally, I want to see the bulls get trapped. So the bulls getting trapped would mean that they have to exit. And if bulls are exiting, they are sellers. Whether they wanted to be or not, they're sellers. And I want their panic to fuel my fire, basically. That's probably the most vindictive way that I could have made that sound, but that's the objective, really. I'm not really necessarily looking for sellers to get trapped unless I wanted a bigger leg up, right? This would have been the perfect spot for sellers to get trapped in a move, right? We've got this move to the downside. We've got this big flush lower, and then bam, big rally to the upside. It cracks up through the highs. If they wanted to get it going, they needed to break that volume node right there and get it up to that L1. That was the target. The problem was they hit that thing like a Ferrari in a brick wall. It's just a tin can. Gone. Nothing. Stopped it dead in its tracks. They couldn't do it. Game over. And even if it does break the low, that's still fine because that adds even more proof. You're in a downtrend, right? So the fact that it broke a low kind of is like, hey, yeah, you're right. You're right. When it comes back, you should probably get back in. So just because it broke a low or broke a high or anything like that that's not a bad thing per se. That can sometimes give you a little bit of a heads up. It is very important as to how it breaks that high or low, of course, as we saw earlier on the daily chart at the highs on, what was that? Crude or one of those. Or no, NASDAQ up at the top. What a train wreck. Big reversal all the way off the lows. Nice pop. They have not made it down to the 453s, but they are not shy about showing up with a little bit of support down here. Look at this thing. Jeez. If we start from the top all the way to the bottom, there's this is a really good example of what volume looks like when a surprise move has happened. When something that people weren't expecting to happen has happened. And it hasn't had a chance to balance itself out yet. Typically, when you've got volume that looks like a bunch of jagged knives, right? There's no nice curve or anything like that. There's no consistency. It's just big spike, dip, big spike, VVP, spike, VVP, spike, VVP, all over the place. That's usually indicative of a market breaking out, hitting a lot of orders, and continuing down. It's a surprise move. it freaks people out a little bit. They don't know what the heck to do. It hasn't had a chance to really find its balance or do anything yet. And typically it won't find its balance until we see a bottom-weighted POC. And at the moment, the POC is still way up here at 680. The buyers are starting to pick away at it a little bit because in the short term, you can see accumulation volume. But it is not accumulation volume in the grand sense of things. They have a lot more orders to fill down here if that's going to be the case. So still what I would consider early to the party if you were trying to get a reversal long. Side note, on the S&P, that secondary bounce off the lows, if that goes bull engulfing into my shorts, I don't want it. No thanks. That's a terrible spot to be a short if that's the case. I will sidestep that. All right. See what kind of support or movement or something we can get going here. Everything's just kind of quiet. If you had to pick an individual coin on crypto to buy, what would it be? Oh, geez. I guess it depends on what your objective is. If you're looking for a lotto ticket, then Doge. Like, I mean, if that thing goes up to $4, that thing challenges the market cap of Ethereum. And it does very, very easily become a dominant coin, even if people don't want it. And then, which I think would be totally fitting. I share the mindset with Elon in that it would fit perfectly with our culture that a meme coin becomes the primary. But aside from, you know, what happens in that future, as it stands, well, I would say off-chain. And when I say off-chain, I mean out of the main primaries, right? So away from Ethereum, Bitcoin, even Litecoin, those are the high-profile ones, the ones that are big names. I would look at sympathy plays, because I think those are the ones that are going to play a lot of catch-up. A lot of traders haven't had a chance to follow along, where they missed the move on Ethereum because the damn thing never pulled back, right? I mean, they never had a chance. So with that overall movement to the upside, I mean, realistically, they've got to have something to go off of. And, well, sympathy plays fit really well with what they would be looking for. A perfect sympathy play, Sushi, would be a really good one. Link is another really good one. Dot, ADA, Cardano, those. Any of those off-chain ones that offer similar things but do it better, at least for now, while Ethereum's getting pummeled. You know, those are the ones that I would pay a lot of attention to, because I think those are the ones that maybe not right this second, but they're going to catch a lot of off-fall when people realize that this train just doesn't stop and Ethereum keeps going. I mean, aside from Doge. So Sushi, Link, Dot, even Tron, ADA, those I think all serve a pretty good purpose in bringing to the table what the other ones do, just on the FOMO. Nice bounce off the lows. Massive divergence off the lows. Huge undertow still demonstrated. Although it did break down momentarily in the end. So that deeper pullback. We've got an L2 into an L1. Then they went nuts. I don't even think they made... Did they make it back to an L1 on that? I think they missed it. They're hovering around an L1 right now. Just poked it. Given this massive undertow, I don't necessarily want to be the first one to the party on the L1 side. I would rather be a seller up in the L2s. Seems like it was a good call to dodge the S&P so far. Although, in hindsight, it looks like it still might have worked. one heck of a bull bar. Jeez. All right, going on 10:20, getting a little bit later in the morning session. Feel free to get those questions in. We'll get those covered for you, and then we'll start heading off into the rest of the day. Pretty good day overall. Not too bad. Patience was definitely a virtue, but aside from that. Now maybe they get the two-legged correction here, because that would put it right back into that L2. That would look great. Well, I think sushi, honestly, for what it brings to the table, I feel like sushi at around the $40 to $60 mark makes a lot more sense than where it is now. Compared to all of these other coins that are going parabolic and going nuts, from, like I said, from what it's bringing to the table and what it offers, 40 to 60 I think is a low ball, but I feel like that in the nearer term would be a more fair value. Uni is one that I think is probably a little bit higher on the list, just because, well, you know, it's kind of like Bitcoin if it was the first one of the scene, more towards like the $70 to $100 range. Still, both of them to the upside, though, definitely. Back to the L1. This undertow tells us that it's much more likely to see a deeper pullback, so expect an L2. I would still like the 3. Anything hit anywhere? No? Nope, not even close. My crypto data's messed up again. Fantastic. All right. Well, I'm not seeing any other questions coming in. So as for today, that's going to do it. Pretty solid day. I missed missed is a loose term. I tried. It was a swing and a miss. On the initial down move on the NASDAQ. Sounds like some of you grabbed that move down, though. Unfortunately for me, I had to wait until it finally pulled back enough and gave me a reason to enter down here in the 535s. Still, nice downtrend, good continuation. Just expecting a deeper pullback. Even if the L1 holds and breaks another new low, the next pullback, I'm still expecting a deeper pullback. This is telling us right now that this has gone on a little bit too long, and it's got to healthily pull back to more of a fair value, and 595 would be a pretty good spot for it. Doesn't mean it has to right this second, though. We'll see. Right now, sellers might be looking to reload on the previous POC. It's right on top of the L1 as well. Anyway, that's going to do it. You'll be able to watch this recording back whenever you want. I mean, you can rewind it right now. There's too many R's in that sentence. It's right on YouTube, so you can watch that back at your leisure. If I missed any questions, feel free to shoot me an email, jhb@ssftg.com. Enjoy the rest of the day. I hope you have a great one, and I will see you all tomorrow morning, all right? We'll talk to y'all later. Thanks.